Flying bird. Let's bring in John Steinberg, West Coast style, the president and CEO of BuzzFeed and a CNBC contributor. It's good to have you, John. Welcome back.
Good to be here, Carl. Good to see you.
You said it. You called it on the day of the IPO. You sat in, I think it was in this chair. You said it's too rich. You came back a few weeks later, said it's even richer than that. Why aren't the longs selling into strength?
Well, look, I never think valuation is a reason to short. I think it's a fantastic company, but I think there's a lot of technical stuff going on here. You have only 10% of the share outstanding that float. You have 8% which are held short, which is roughly 2.5 to 3 times more than what's typically held short in the S&P. So you may have some covering pressure here as well. And I think you have a lot of funds that say that they want to own Twitter. So from a technical perspective, and on very light volume around the holiday, there's all of this stuff, which is sort of putting a lot of air into the stock, I think.
How much are you going to watch for downgrades over the next few weeks? And as we get into, I think it's February and April, some of these lockup expirations, the number of shares is still a bit unclear.
Right. Well, first of all, Macquarie downgraded it today, and I think Schachter's really smart. So he's the first one. I mean, these analysts just kept saying it's a high price and then upgrading and upgrading and upgrading, and nobody really kind of digging in and saying we think it's a great company, but ultimately there's no new product and everybody keeps raising their price targets. I also think going into the new year, we have a case where people may sell because, remember, the whole entire market has ripped this year. Nobody has any losses to pair gains with. So you could see in the New Year's people saying, all right, we want to take our gains. We're sure we'll have some losses in 2014 to put against it. So that could happen as well.
Well, it's not just Twitter, we should point out. Certainly that stock and the volume has been a showstopper, but Facebook is also trading near the highs of the year. If you look at the ETF SOCL, the social media stocks have been in favor. What do you hear about why Wall Street is suddenly enamored with these stocks?
That is a great point, and that's the second. That was the fundamental thing I wanted to pair with the technical aspect. Investors are starved for growth, and investors are starved for a way to own this kind of new media future. And when you look at the number of stocks that are these future-proof mobile social stocks, that are the way that all the consumption is going to be, it's hard to name 5. Maybe you can stretch it to 7. I mean, what do you really have? You've got Facebook, you've got Twitter, you've got Netflix, and then you start getting into these very small stocks like Yelp and Zillow. So if you want a way to invest in the future, you're sort of hard-pressed. This is why we have all of these hedge funds now going into these pre-public, typically venture stocks, because there's just no public stocks out there as a way to kind of play the media future.
You know, John, I wonder if there's also an increasing skepticism of when Wall Street becomes skeptical. You know, if you look at the year-long chart of Facebook, the world and their dog were down on Facebook coming into the summer, and then suddenly you get that reversal. Suddenly they prove their mettle and the stock doubles. People doubled their money coming through the fall. And I wonder if they say, actually, and it may be an East Coast, West Coast split, I'm not sure. Actually, they say, you know, you analysts, you just don't understand what's going on here. If you do understand, you understand too late.
Right, and then there's the question of all of these revenue estimates are so low that there is an opportunity for a beat. So if Twitter does, you know, $1.2 billion next year, that puts it at basically a 20 times EV to revenue. Even if it doubles that, it's at 10 times. That would put it a little bit more in range with Facebook. But these are such small revenue numbers, and they're so easy to crush that may be part of it as well too. But I agree. I mean, people are sort of afraid of being left out. I was thinking it's sort of like buying a pair of pants that are too big for your kid. That's what these prices are like. So you buy the giant pair of pants. You got to wait for your kid to grow into them, and then, you know, you can't buy a new pair of pants for a while. So I mean, that's sort of what this is kind of like almost.
And you sell it to their younger sibling, I guess, down the road. John,
you hope they wear. You hope that they last for the kid. Yeah.
You mentioned the Macquarie downgrade today, which says, look, there's opportunities for these guys, but they're going to have to. The costs are going to go up. They have 5% of Google's employees, less than half the number of employees over at Facebook, and we know they're plowing a lot of their money back into the business. But what happens to SG&A over the next 12 months?
I think they have to massively ramp the sales force. I think that's always been the key. That's what I talked about a lot with Facebook. I see it in our own business at BuzzFeed. The Fortune 500 needs to be covered in a consultative way, almost with a pod style where, you know, some of the biggest companies get a one-to-one type coverage, and then with some of the next kind of set in the Fortune 500, you have a team of 5 people that will cover those 5 companies. Yes, they're going to have to massively ramp the sales force as well, but I think this is mostly a top-line story. I mean, we're looking at so little revenue right here for this company. It has to show that it can mainstream both the amount revenue to the brands and massively grow the audience size, and then it can grow into a price that's potentially this high. But I am glad to see the Macquarie downgrade, just because it's somebody saying loving the company doesn't mean you have to love the price. It doesn't mean you have to short, but you don't have to keep saying raise the price, just because you think it's a fantastic company.
Well, John, here's the definition from Investopedia of a bubble, a theory that security prices rise above their true value and will continue to do so until prices go into free fall and the bubble bursts. Analysts are increasingly wondering about the valuations, about whether this is just a bubble.
I don't think it's a bubble. I mean, I wouldn't use the word bubble. What I do think it is a lack of investment opportunities. I think that we will see a bunch of IPOs. Kara Swisher had an article on it yesterday in the New Year. She speculates that Box and Dropbox and a bunch of these cloud-based companies and more of these social companies could go public as well. I think we need more distribution of investment opportunities, and I think that that will actually solve them because investors will be able to diversify because there's just no way to invest in what's going to completely transform the way people consume all this stuff.
John, you in Los Angeles, that's a dangerous combination, but we appreciate you taking some time for us.
I got to work. I mean, I'm at a startup. I got to be out here working. We got a lot of people out here.
We'll see you soon. John Steinberg.
See you back in New York.
All right.
All right,
Thanks so
still
much.
ahead. Former FJ